How's it going, guys? It's Doc. Bitcoin having an absolutely wild day. So much volatility. Today, we're going to talk about why the volatility happened. Are you getting shaken out? The answer is yes. Hold on to your bags. I'm also going to give you some tips towards the end of the video on how you can avoid all this and some big catalyst events coming up. So grab some popcorn, watch to the end. We got a lot to go over. But before we get started, welcome back to the channel. For those that are new here, my name's Doc. I'm a resident physician throughout the day, and at night, I take you guys on my investing journey. What a wild, wild day. Look at this daily candle, guys. We started off in the middle of this channel, right about 95,000, and we tanked down below this channel. Absolutely tanked down. And this area is actually not surprising. I called this out in my Discord. It's free. Link down in description. Check it out. I called this out at 5:52 this morning. I said, hey guys, roughly 700 million in shorts are going to get liquidated if we hit 89,500, 89.5K. Wouldn't be surprised if we wick down here for market makers to liquidate folks using leverage. This was almost too obvious. It was like the writing was on the wall that we were going to dip below, wick down below $90,000 before recovering, right? And guess what? It was $800 million in liquidations. And the sad part about this is that it was both longs and shorts, right? So not just people who longed, but also people who shorted the market. And the way that these market makers, the way they do this is there'll be an initial dip down, and that will cause both bots and like humans to put in longs, only for the market makers to tank the market even more, liquidating those folks. So, right, they liquidate folks, the longs on that first drop down, or excuse me, the longs, and then people put shorts in or longs and they move the market again. So over $800 million in liquidations. Guys, stay to the end of the video. I got some pretty exciting things. Grab some popcorn. We got a lot to talk about here. So $800 million, longs and shorts. Binance doing the majority of the damage here, almost 40% of those liquidations, which is absolutely kind of wild. Okay, so we talked about this range here, wicking down. You know, the dominance absolutely spiking. We're above. I'm not going to spend a lot of time on this, but we're above the bull market support band. Bad for alts, right? We need dominance to tank if we're going to get back to alt season. So, right, a couple weeks ago, dominance was at 54%. Life was good. We were all feeling it. Our altcoin bags were mooning, right? So that's the goal. That's what we're trying to get back to. But we need better economic data before that's going to happen. And we're going to talk about that in just a sec. So we look at the entire crypto market. Look at the 7-day here, right? Bitcoin's down almost 7% for the week. But look at ETH. ETH getting beat up. Solana getting beat up. If we scroll down, Tron, Injective somewhere down here. I saw that they were not doing super well today. Arbitron down 22% for the week. Yeah, it's tough out here, guys. It is tough. But you know what? The goal is when you buy your bags, you need to know that you have to have conviction, right? When you buy your bags, you need to know that you are going to hold through all of this craziness. So why is the market dipping, right? We saw the wick down, but why is this all happening? There's always a narrative, right? There's always going to be a story that people are going to come up with to try to rob you from your bags. Well, the big one is there's reports or concerns that inflation is going to kick back up, right? So Bank of America, they're saying we might not have any rate cuts this year. And a couple months ago, there was 4 to be projected. So obviously that scares the market. So tomorrow we have some big data coming out, right? We have PPI, that's the producer price index for commodities, PPI data. That is a measure of inflation. That comes out tomorrow morning. I'm going to obviously be tracking that. So follow me along for that. But the real question is, well, what could be driving inflation? Well, there's 2 things. The Dixie is spiking. The Dixie is the strength of the US dollar, and the strength of the US dollar can actually stoke the flames of inflation. Also, we know that the Dixie, the US dollar, is inversely correlated to altcoins and Bitcoin. So we need the Dixie to go down for our crypto bags to go up. The other thing is, and I don't hear anybody talking about this, the price of oil right now over the past couple weeks is spiking. Guys, if the price of oil is going up, this is significantly contributing to inflation. So we need to watch this. Hopefully this can turn over and we can start putting in some lower lows. These are not great drawings, but if we just make a really kind of ugly drawing here, I mean, we've been testing this. You could even redraw this if you wanted. You could even say this is something like this. Oh gosh. You could even redraw this like this and say that right now we're above this trend line. So the question then becomes, well, when are we going to get below it? And ironically, this coincides with the bull market support band. So we're hoping oil breaks down, right? We're hoping that the Dixie can eventually break down. The big thing is PPI tomorrow morning. Previously it was 3%. The forecast is 3.4%. Okay. So we need this to come in at expectations or lower, right? We already know inflation's increasing, right? Last month it was 3. Now the forecast is 3.4. So I'm going to be watching this. It comes out tomorrow morning. Follow me on Twitter, subscribe here. I'm going to make sure I'm getting you guys great information as fast as I can. This is really going to cause the markets to go super volatile up, super volatile down, right? So a lot is hanging on the PPI, which is tomorrow, and the CPI, which is Wednesday. I thought this was funny, right? People buying the dip here, completely oblivious to PPI and CPI data coming out tomorrow. Guys, this data is going to swing the overall market. So just really, really keep an eye on it. Be safe out there. Dollar cost average. Don't put your whole bag in at once. So what this really means, I wanted to show this, is it's kind of a good news is bad and bad news is good, right? Obviously, we don't want inflation to go really high, but if they're, on the flip side of that is we kind of want the economy to maybe cool off a little bit, because then the Fed may be more likely to increase the size of their balance sheet. That's quantitative easing. And when when the Fed does that, that is better for risk assets like Bitcoin. You can actually add just Bitcoin on this, BTC, and you can see a pretty gnarly. We'll take a quick look at this chart. The pink line here, what you're looking at, this is Bitcoin, the price of Bitcoin in pink. The blue line here, this is the Fed balance sheet. And the reason that I want to show you guys this is when we're increasing the Fed balance sheet, that's known as quantitative easing. And you can see when we're increasing the balance sheet, Bitcoin's following, skyrocketing. And you could also make the argument that the opposite is true too, right? When we're reducing the rate of the balance of the Fed sheet, Bitcoin tends to go down, right? Obviously, we're having a jump here as well because folks kind of got used to us increasing the balance sheet. It's going to be interesting. I want to end on this. I thought this was such an interesting clip. Guys, this is a clip from Tom Lee in 2019. We're going to end here. Before I play it, if you guys get any value out of this, considering liking the video and subscribing. This is Tom Lee in 2019 telling CNBC to buy Bitcoin at $5,000. Absolutely wild. If this doesn't get you pumped up, I don't know what is. Let's take a listen.